This is Ken Lake with a technical market update for Wednesday, October 19th. I'm going to start with November soybeans. Tonight's close at 982 technically will be very friendly. Close above a 200-day moving average, which is 977. So bear in mind that'll be support, pretty close support here, with longer term support being the 50-day moving average at 970. Long-term lows at 938, keep that in mind. Market is overbought and should correct a little lower, but as long as we don't penetrate 970 on the close, then we will say we're going to be somewhat friendly soybeans in here. Still hold that for short-term cash flow needs, soybeans could be sold in here, but longer term, as long as these areas hold up, then our upside target becomes this area of 1017, 1018. Considering that locally we're closing in on the close of harvest period, and as we do that, soybean basis should start to improve as well. The local market will see some freight coming in to take soybeans out to clear out some logistic problems that this region has, and trains and boats and that sort of thing showing up. So within a couple of weeks we should see some soybean basis improvement, and that should come on the heels of farmers locking up bins and not wanting to move additional products. So that could spur an additional rally in here. Don't know if that means the funds get long soybeans this early or not, but it could certainly lead to that. So somewhat more friendly tonight soybeans than we have been for a while. But the trends are still sideways currently, with a longer term trend down. Perhaps we'll start to see that changing here. Switch to Dees corn finally for the evening. Again, closed right at our upside resistance here, which is the 100-day moving average at 358. Call support 342. A little bit overbought and ought to correct lower, but when we saw this little bit of a correction yesterday, of course did not follow through today, which comes on the heels of an additional fund short covering. If that continues, which I believe it will, it puts us in place to trade this 381, and keep in mind that the carry into the March contract is about a dime, so that would mean March trades at 391. I think for farmers that are holding this year's crop, that could be a place to place hedges, and then we'll wait for basis to improve. Local basis in the neighborhood of -10 to -20 the Dees, which is -20 or -30 the March, would rapidly improve post-harvest, again because farmers have been squirreling away. Corn and soybeans don't necessarily like this price here, so I don't believe we'll see much farmer selling post-harvest unless basis improves. Could come on the heels with additional short covering in the futures as well. Farmers should look to make those sales earlier this year than normal and keep themselves out of selling in patterns that they typically sell into, say, January or early spring days. You'll be competing with a lot of other corn movement at that time.